Gotta fix my hair, makeup, and there we go. Welcome, everyone. These kinds of calls, I do them almost weekly, sometimes bi-weekly, mostly for my Udemy students, but also people from YouTube also welcome. And the main idea is that I will answer any kinds of questions on any challenges you're facing. So if you're taking a course of mine and you're having some challenges that you're facing and you want to have more of a conversation, ask more real important questions, this is the best place to do that because we can have a real conversation. And throughout the call, usually I have some topic that I pre-plan. Last time we talked about time management. Time before that, we talked about mobile app business ideas. Before that, we tried to create a mobile app on the fly by using AI, and I totally failed. And today, I have a cool topic because I was thinking, well, what should we talk about? And the topic I chose was um, smart contracts for cryptocurrency tokens. And even though that sounds incredibly boring, it's actually really exciting. So, first of all, I want to say if you have any questions, actually, even after this call, if you're watching on the replay, which like most people usually watch on replay after the call, if you have any questions, feel welcome to leave a comment. I see the comments, I answer them. Uh, Today, during the call, I'll be able to answer them immediately. Afterwards, maybe I'll answer within a day or two or three. On Udemy, I answer within 24 hours, but sometimes I can't always get to my questions on YouTube. But I do prioritize questions on Udemy. I try to answer within 24 hours. So if you have anything burning, ask on Udemy. But yeah, so if I see any questions come through the chat, I'll stop my presentation and I'll answer the questions coming through the chat. But in the meantime, I'll talk to you about smart contracts and cryptocurrency and why smart contracts are one of the most interesting parts of cryptocurrency, even though the name smart contract sounds pointless. Like, what is that? Like, that name doesn't really tell the story. But hopefully by the end of this, you'll see, oh, like this, maybe if you're like not getting like, why is there so many different cryptocurrencies? What's the point of them? This is going to be the differentiator. Like this is really the answer of like why there are so many different ones. And if you create a good smart contract, it makes your token very marketable. And if your token is marketable, it will get adoption. And if it will get adoption, you as a token creator will become rich. Hopefully, me. Ah, just kidding. Hopefully, well, all of us, yeah, because it's today easy to make a token, hard to get adoption. Now, also, if at any time you have questions, I don't know who's on the call until they post questions because for privacy reasons, YouTube doesn't tell me. It doesn't tell me who's on the call. So if you ever want to chat or interact, the chat is actually the only way. So before I get questions, let me get into the smart contracts. Let me explain what they are first. So I'll explain what smart contracts are, and then I'll brainstorm some of them with you. We're going to use ChatGPT, and actually, it's going to be a good idea, a good opportunity for us to compare because today I started using Claude more than ChatGPT because it's been giving me better answers. So I'm going to ask the same question from Claude and ChatGPT, and we'll also see the difference, like which one is better, because Claude seems to be better because GPT-5, they said, oh, this thing is so amazing. But actually, it's giving me worse results than 4. So I don't know how amazing GPT-5 is because for a lot of queries, it's giving me like very it's either politically correct answers or very underwhelming answers. It's just not as sharp and not as bright. So we're going to compare Claude um, to ChatGPT. I'm just going to get my Claude browser up, and then we'll be ready to do it all. But before we do that, so let me explain what smart contracts are in cryptocurrency. Basically, like if you use paper money like dollars or euros, you just use them. You have a dollar, you give it to somebody, and that's it. Nothing else happens. Maybe you get taxed on it. So, okay, right. This is a good analogy, actually. Not a perfect analogy, but a good analogy. So you get taxed, right? So something magical happens. Like well, it's not exactly the same, but there's a transaction fee, right? Somebody takes a transaction fee. Okay, so something else happens, right? A transaction plus other events. Okay, so this idea of other events becomes important in cryptocurrency because when you create your cryptocurrency token, and if you're not sure how to create a cryptocurrency token, it's super easy. Like today, you can make one in literally 5 minutes. You don't need to be a programmer. Like you wouldn't be able to create your own Bitcoin or Solana or Ethereum. Those are like independent blockchains. They're its own big ecosystems. That's hard to make, but it's easy to make a Solana based token or an Ethereum based token. That you can do without any technical skills. There's websites that help you do it. There's no coding, and you basically just have to press a button and it will make the token for you. The challenge is first is to create your cryptonomics or tokenomics, actually, they call it, not cryptonomics, tokenomics. Tokenomics is basically the economics of a particular token. What's the supply? Is it 10 million outstanding tokens? Is it a billion? Is it 10 billion? Um, can you mint more? Is the mint supply capped, right? Is there going to be inflation on it? All these little details, like who is going to use this token? Why should they use it? What's the differentiating factor in this token? All these little details are things that are under the umbrella of tokenomics. And you have to get them right before you mint your token. Because if you mint your token without any thinking about it, what's going to happen is in the first minute, you're going to get a crazy amount of buying from bot, like, automated buys. And you're going to think, oh, my token is going through the roof. I'm going to be rich. And then within like 12 or 24 hours, all the bots, the robot software that bought from you, sell your token. So you end up exactly at the launch price. And then you have to start, okay, like think, how do I make this thing go up? And if you can make it go up, it's a worthless token. If you can make it go up, it will make you rich because, like, not just rich, but like crazy rich. Because let's say in my Spark token that I made, there's 100 million outstanding tokens. I put trading supply 10 million tokens and I funded it from myself. Like I funded it for a certain amount of money. So it has a market cap, it has outstanding token, and I funded it to the point of the 10 million outstanding tokens for trading that anybody can buy and sell, had a value of a tenth of a penny each. That was the launch price. Today, the price is about just almost a fifth of a penny. Yeah, I'll share my screen so you can see. Sometimes the extra decimal point math is a little weird, but you see, it started out. This is the token. It started out as 0.0010. Now it's 0.0017 and over that. And at the highest, it went to 0.0018. So almost doubled, right? 80% up at a certain point from launch. So people who bought in the beginning, at the lowest price, they made approximately 80% since June, which was when I launched it. So it was actually quite good, nearly a double for them. Now, that's not the goal. The goal is that in 5 years, this thing is like $1, right? Now, how do you make it $1? It's actually a mathematical formula that's easy to understand. Right now, there's a supply of 10 million outstanding tokens. Whenever people invest, they buy a little bit. And the more people buy, the fewer remaining tokens there are. And because there's fewer remaining tokens, that means there's scarcity. And due to the scarcity, the price goes up. And so what I have to do is get adoption for this token in actual use. So more and more people buy it, and naturally the supply dwindles. And when that supply dwindles, you see I have a reserve of these tokens for myself. That's not these 10 million. I have a bunch of these tokens myself, a whole bunch of tokens. But let's say, like, even if I have 10 million tokens or something, right? Just for example, and the price of this goes to $1, well, I'm holding $10 million worth of tokens because I was able to get adoption for it. Okay, so that's how you kind of get rich with cryptocurrency tokens. So that's the idea: is that launch a token with good tokenomics, get adoption. Now, to get adoption is the hardest part. Tokenomics is on a scale of 1 to 10 of how difficult it is, maybe a 3.5. out of 10. So it's not so hard. It's not like one, like launching your token is one on a difficulty of 1 to 10, super easy. Getting the tokenomics right is like 3.5. Getting adoption for the token is 10. 35 out of 10. Like really, really hard. And one of the main ways to get adoption is differentiation and actual use. Like why should people use this token instead of other tokens? And this is where tokenomics, not tokenomics, smart contracts come in. And so I'm planning this month in October to create some smart contracts for this token. I've been thinking a lot about the smart contracts for this token because I didn't want to just make them, because once you make them, like they exist. So you have to put some thought into it. And so an example, like a really good example, let's say, why should people use this token versus, like, let's say a dollar or a Bitcoin? Well, let's say I had a token for cats and dogs, right? Like pet centric focus. Well, for every transaction that there is on this platform, I keep 0.3% of every transaction, right? All the buying and trading, I keep a tiny bit, tiny bit. What if I make a smart contract that says, let's say I had a doggy coin or pet related coin. I would say if I keep 0.3% of every transaction, 0.1%, so relatively tiny, but if there's a lot of volume, it's a lot, it's meaningful. So 0.1% would go to the charity that I would pick immediately, as long as that charity accepts cryptocurrency, right? So I can immediately send a part of every transaction, like a tiny part, to some wallet, and maybe it's some wallet of a pet related charity. Okay, that's amazing, right? Because suddenly whenever you transact with this token, not only you transact and use like you reap the benefits of actually using this token, like maybe it's deflationary, maybe you save on transaction fees, all the existing cryptocurrency benefits, but you also have an additional benefit of, like, immediately anything you transact for, you donate to pets without actually donating your own money. A part of the transaction fee gets donated. In the past, transaction fee would go to some person behind the scenes, like you never know them. Like, for example, if you trade stocks, the same thing happens there without that benevolent factor. Like it's called market makers. So people who buy and help you buy and sell, they're called market makers. They always take a little cut of the trading fees, but they just keep it for themselves to get rich, and they do get extremely rich. I mean, they provide value, but they get extremely rich. But in this case, the market maker is the person who creates the token in cryptocurrency. So you can say, okay, I'm just going to create this token and say 0.1% goes to this charity that I picked. And I picked a pet related charity, but you can do, donate to children's diseases or whatever is relevant for your token, right? If you mint the token. So that's kind of what I'm thinking to create. So now that you understand what a smart contract is, let me show you what ChatGPT gave me, and then we'll ask the same thing of Claude, and we'll brainstorm live what's a good smart contract to create for my token. Because if you're not familiar, I created a cryptocurrency token, the Spark token. I'm just going to go to this website, SPRK token. I'll share it with you in case you're not familiar, just so you can get a sense of what my token is. Just going to go to share screen and show you the website for my token. This is the website, Spark token, SPRK. Basically, it's the first cryptocurrency designed to fund creative people and creative projects. So like music, books, art projects, startup ideas, pretty broad, but like mostly creative people in different ways, artists, entrepreneurs, etc. And the way this works is, any cryptocurrency and any Solana token has immediate benefits. Like there's no inflation, it's deflationary. There's no transaction fees. Effectively, I mean, transaction fees exist, but they're a penny or 2 pennies each, compared to if you buy something at a store, it's a 5% per transaction fee. So it's like you get a lot of savings immediately. like cryptocurrency, like a lot of there's some drawbacks in cryptocurrency, but there are real benefits, like actual sound financial benefits. Um, so this is the currency. It's out there now. This is the chart for it. I've been able to grow it. It started out a tenth of a penny. Now it's 0.0017. So it's growing over time. Um, and what I want to do is create kind of a differentiating factor for it, a smart contract, uh, so that then I can really go and promote it due to this differentiation. Because anybody savvy in cryptocurrency would immediately ask, hey, what's different about your token right now? Without a smart contract, there's not a lot of difference between this and any other Solana token. This is the key. When I create, and if I manage to create a really compelling differentiation, the smart contract, that in theory would be the strongest step to differentiate this token from other tokens. And if the differentiator is attractive, this can get adoption. All right. So I asked ChatGPT, because ChatGPT knows about my Spark token because I've been asking it so much. Claude does not know so much about my Spark token. So let me ask Claude the same thing, but I'm just going to give it a little bit more background. I'm going to say I launched a Solana-based token called SPRK. It's for creative people like artists, musicians, and entrepreneurs. I'm just writing fast with errors just so I don't bore you. So for my Spark token, what would be a great idea for a smart contract? Basically to make it differentiated and compelling way so that I can convince people to use it and get adoption. So I'll ask this from Claude, or you see the model is Sonnet 4.5, and then the model here is ChatGPT 5. So while that thing is working in Claude, I'll show you the highlights of what ChatGPT told me. And by the way, if you have any questions, if you want to make any comments, let me know. By the way, sorry, I clicked on a bunch of tabs, but I made a digital AI twin for me. This is AI, so I can show it to you later in this call. It's kind of a funny thing, but for now, let me share with you and read the answer from ChatGPT. But then I just want to remind you, if you have any questions, feel welcome to use the chat and let me know. So here's the question for my Spark token. What would be a great idea for a smart contract? Here's the answer. It's too complimentary. It's always saying fantastic questions, even if the question is stupid. Like, I wish it would sometimes say, hey, this is a little stupid, but okay, that's beside the point. Okay, so yeah, we want to create real utility and long-term engagement. This is the key between a useless token and a useful token. So because your token's mission is support artists, creators through micro funding, right? Because the idea is that they can use this as like GoFundMe or as Patreon for themselves and just raise money from donations, like crowdfunding. Okay, so you want a smart contract that does these things: strengthens community trust and participation, encourages collaborative, creative collaboration, and generates ongoing value, not just one-time hype. And the first idea is this revenue sharing contract, like the example I gave with the pet-related coin, where the revenue sharing would go to a charity of my choice or something, they're related to, in that example, pets, but in this example would be creators and artists. So you can reward creators automatically when their contract generates engagement or tips. So what I could do is, let's see what it says first, and then I'll give you my spin on it, because I've also been thinking about this and I have some ideas for smart contracts I want to make. Sorry, I check. The reason I'm jumping screens every once in a while is because I'm just checking if anybody's saying anything, just in case, I want to be responsive to any comments. Because again, I don't know who's on the call until there are comments and questions, and then I see them in the chat. But before that, for privacy reasons, YouTube doesn't show me who's on the call. In any case, so okay, creator revenue share contract. Here's what it would do. When fans send tips in Spark, okay, so like for example, if you're an artist and you say, "Hey, can you send me a tip?" If they tip in dollars, it's going to get taxed, or whatever, or there's a transaction fee from the credit card company. Somebody's taking some part of that. With Spark token, there's maybe a penny, doesn't go to, it's like a transaction fee, but um, to donate, there's a transaction fee of a penny or 2 pennies or something like that usually. For people to buy the token, there's a little transaction fee that goes to the market maker, which is me. But that fee is the one that I can donate back. I hope that was clear, because there's two different transactions, right? There's a transaction when the token is used, and there's a transaction when the token is first purchased out of the outstanding token supply. So it says 90% of the value of the transaction goes to the creator. So even though, let's see, let's read it carefully what it says. When fans send tips in Spark, a smart contract automatically splits the payment 90% to the creator, 5% to the community pool for future grants. It's interesting, right? Because then we can actually make grants for some kind of art project, which is really cool. Actually, I didn't think of that. Like, this can fund certain art projects. Like, let's say some artist wins a contest on a website or something, and we can fund that artist, or some kind of in very engaged community participants. That's super cool, actually. I didn't think of that. And then the other idea, 5% to the ecosystem treasury or liquidity pool. That's the liquidity pool is where, I guess, I don't know why it would put it into the treasury or the liquidity pool. That one I'm not excited about. Maybe I would ask a follow-up question if I had more time, if this wasn't a presentation. I would ask more questions to a ChatGPT why I chose this bullet point. But the community pool for future grants, I like. And by the way, the ecosystem treasury is kind of similarly functioning. It's a treasury, right? So it's basically a supply that's not mine and not for trading, but it's a supply that's, for giving to somebody who does something great. Maybe somebody who promotes the Spark token, maybe some influencer, maybe whatever. So there's some outstanding supply, like it's part of your tokenomics. You would figure out how many reserve treasury tokens you would have in order to pay people for certain great things that they might do. So really, to be honest, the second and third bullet points, they're a little closer together than I initially thought. They're kind of similar, but two is more on point. Now let's see what it says. So that's just this idea. I really like this idea. Now, Spark patronage staking rewards contract. I was gonna make a staking rewards anyway. That's something else. So it's like staking rewards. If you can think of it like no, actually it's not. It's more like a CD in a bank. Like every year in a bank you get 4% or 3% or 3.5%. I think, of course, inflation is like 5% or something. You're a real inflation. Government tells you it's 3, but it's 5. I did a calculation of real inflation with ChatGPT, and it came out closer to 5. I have a video on it where the entire calculation isn't me; it's really just me asking ChatGPT, but ChatGPT did the whole calculation. So let's say 5 in the dollar, and far higher in many other currencies is the um, inflation rate. So if your bank gives you 3.5%, basically you're not making 3.5%. You're just losing a percent and a half, 1.5%, right? The difference, 5% inflation. So you're losing less. In the case of staking, it's a little like getting extra money, but because cryptocurrency is often deflationary, like there's no more supply. I'm not just printing more tokens. This is, there's a cap supply, meaning if I give you more, you actually get more value. So it's actually real money. Plus, these tokens tend to grow, tend to, right? There's no guarantee, but they tend to grow faster uh, than dollars, because dollars tend to lose money. Every year, the dollar loses value due to inflation. So if you hold a dollar, it's almost like putting some percentage into the garbage. It's the same paper, but it's worth less every year. To solve that, you have to buy assets, because assets, even if they don't grow their own value, they will grow in price because it will take more dollars to buy them, because the dollars lose value. And so your assets cost more. So this the solution to not lose money to inflation of the dollar or other currencies is to buy assets. Now, which assets is a whole different conversation, because some assets also lose money, like cars or something. So anyway, it's not about this. The conversation is not about that. The point is that the cryptocurrency asset typically is one that grows, actually one of the fastest growing over the last 15 years. Cryptocurrency, from Bitcoin to other small coins, it's really hard to lose money in cryptocurrency unless you get hacked or something, or just lose your passwords or whatever. It's possible to lose money in cryptocurrency, but traditionally it's been really hard. Like you have like be super unlucky, because 95% of them grow, and even if they don't grow, like kind of stay stable. Even weird ones grow, like meme coins and things like this. So yeah, so you get the that's what this is. Like staking rewards. That's what I explained. It's that similar to Banksy, but just a little better. Now, let me quickly switch, see if anybody's here. Anybody wants to say hi in the chat? So far, no. So I'm going to come back. Okay, so let's see how this explains that point. How this would work. Fans stake Spark into the creator vault. Each artist can have one. Okay. The longer the stake, the more fan that you earns the yield. But this is pretty standard among cryptos. The only thing is I have to make this, which actually, like, I was planning to anyway. This is something I was planning to do. This is like a no-brainer. Like, this is the only brainer. The only question is, what will be the percentage? Because I have kind of a, you can have a token that it has uncapped supply, meaning you can print more tokens every year, which devalues the tokens that are currently held by investors of that token, which I didn't want to do. I didn't want to be able to devalue existing people so easily, right? That's what the dollar does. Every year they print more, they basically devalue your dollar or any other token. I didn't want to do it, so I have a capped supply. So I cannot just print more tokens. So I have to give a relatively small percentage of that token, which is going to make me seem cheap, but it's the right thing to do to a point, because if there's no inflation, there's already a lot of value built in. Like 1% or 2% of this thing is like 10% of a token that's having inflation, or it depends on how much inflation. So that's really what you want to be careful, is like, what's the inflation on a token if it doesn't exist, whatever. So that's one thing. Also, it can change year to year. So let's say, so I do smart contract, like a really rich one for this kind of a situation, let's say 5%, just to entice people to come in. Next year, I don't have to do that percentage. I can switch it. And then it says rewards can be distributed weekly or monthly through on-chain logic, right? That's a common knowledge in the cryptocurrency world. That point is not a breakthrough point, but yeah, good reminder. This thing I was gonna do anyway. It's just not a huge idea. Now, interesting, milestone-based crypto funding contract. This is interesting, but let's read what ChatGPT has to say. Fund creative projects transparently. So, okay, maybe if the people funding get to a certain funding level, let's say anybody who raises $100 gets an extra 1%. So instead of $100, they end up quickly with 101%. Or since we just pretend imaginary scenario, why not be generous? We'll give them 10%. So for every $100, they get $110 worth of this token. That's cool. I kind of like that. Because for them to raise $100, their investors, their donors have to buy $100 worth of this token, which makes the token more valuable. And because I hold many tokens, my overall value goes up, not to mention the value for all the investors. Now, actually, this has a better benefit that I just realized, because the hardest thing to do is to get somebody to onboard onto the cryptocurrency, because they have to go to Coinbase and buy it, and they don't know how to buy it, and it's a long process, and it's confusing, error messages and whatever, it's boring. But if I incentivize it, like say, hey, you're after your first every $100, you get donated extra 5%, and $1,000 you get donated 3% or whatever, I don't know, but you get extra free, in addition to the staking rewards, in addition to other things like airdrops that are possible. And if that can be built in, then that gives people motivation to raise more money. And as people raise more money, supply goes down, meaning the value of all the tokens goes up and everybody benefits. And of course, the trick is not the trick, but the strategy, the question is how much to give. Because if you give too little, let's say 1%, that's kind of meaningless, right? People will say thanks, but 1% makes no difference. $100, now I have $101. Boo. But what if I give $50, right? Or double. First $100, double. Okay, actually, wildly generous. $100 doesn't make a big difference in people's lives, but to give 100%, to match 100%, that's incredibly generous, unheard of. Okay, or whatever, right? It can be some number in the middle, but the reason I'm using these extreme numbers, 100%, 1%, is that if you give too little, nobody's going to want it, nobody's going to do anything. It's almost like you're giving nothing, which you are, because you're giving too little. If you give too much, you need to find that sweet spot that motivates people to really, really, really want to raise that amount. So let's say instead of $100, I make it $500, but let's say after $500, they get another 100. Okay, now they're getting $600. Cool. Now $500 is a significant enough amount that it will make the token jump a little, because right now the market cap of this token is not a big market cap. Over time, as the supply goes down, it will take more money to move the needle. But this is, you see, a great thing to do, because a person who has been onboarded and already has learned how to raise money, and it's part of their workflow, like it's part of just what they do now, they raise money through donations, they can keep going after the $500. They can raise 1,000, they can raise 5,000. Maybe they will be lucky and raise money forever, and over time raise $100,000. Right? That would be great for them, and that would be great for the token, because if $100,000 worth of this token is purchased, that drives the token price through the roof. All the existing investors get rich, including that person who raised donations, because that person, I don't know the math offhand, but they will, let's say, raise, let's say 100,000. They could drive up the price of the token so much that that's a 10x, meaning their 100,000 becomes $1 million worth of tokens. And if they stake rewards that, like let's say 3%, now they're earning 30,000 worth every year, just on passive income, right? Out of that $100,000 investment, which is, can set them up like kind of for life. Now that's getting ahead of yourself, and it's also like 30,000 is not enough for some places unless you live frugally. But like it's foundationally a very interesting starting math because you know if you raised $100,000, you can raise more, right? So it's like, um, and you can just it never has to be the last and only thing people do. That's just an example. Um, so cool. I'm just taking back any comments, questions. Um, Not too much. So that's a cool idea. Milestone based crowdfunding contract. I love this one. I also love the idea that after a certain milestone, oh, maybe, let's say after people raise $100 or $500, they get to rev share the point number one, like all the liquidity pool transactions right now. I get 0.3% of every transaction. I can give that to them, or I can give like half of that to them, or whatever, right? For every transaction that they raise, um, which would be very incentivizing because it's hard to make a lot of money, but it's completely passive income. So it's not something that dollars can offer you ever, right? There's no such smart contract in the dollars, not even remotely close. It almost seems sci-fi. Like, how can money do this? But that's the value of smart contracts. It's super, super cool. Um, okay, let's see what this one is. Creative, there's the next one. Creative royalty contract. Let's see, multi-sale royalties. I don't know what this thing is. Guarantee ongoing royalties from NFTs. I'm not big in NFTs. I don't like love the NFT world because I feel like it cheapens art because the NFT community just takes gifs, little tiny garbagey kind of pictures, so imagines they are worth a lot, and it kind of bastardizes real art. So I'm not into it. And it's not a scam, but it's like scam adjacent in many ways. So I kind of stay clear of NFTs, but let's see what this has to say. Whenever a digital asset, okay, NFT, song license, artwork is sold, a percentage of the proceeds automatically routes to the creator's wallet. Yeah, that actually works. I'm into giving some money back from the transaction. I don't know if I want to get into NFTs, and I don't know if it's for when it's an asset is sold or resold, because they're not going to be buying and like selling and reselling in cryptocurrency. They might get donations in cryptocurrency, but I don't know if many people, many artists or creators take revenue in cryptocurrency. But if they do, it's much better for me because the people who pay them have to buy this token, meaning the supply will go down. So this also would be very good because even though a lot of artists and creatives don't like transacting cryptocurrencies, not everybody doesn't like it. Some people like it, and for those people, this can be incentivizing. So that's a cool one. Now let's see, community voting. Which let's see. Holders can stake Spark and to vote on proposals, which artists receive grants from us, which projects are featured. This feels like something you would do after you have a thriving community. So maybe this is not an early stage smart contract because I can just see myself like, hey, everybody, let's vote. And then there's like 0 votes. Okay, tiered membership. What is this? Give fans exclusive access based on the Spark token. Interesting. So people can maybe buy if they have enough. They have, let's say, $100 worth of Spark. They can take my courses for free or something. Let's see what I can give access to. I don't think I can programmatically do that. Smart contract verifies wallets balance and stake duration, unlocks perks like private concerts, which I don't do. I mean, not private and not public concerts. Early song releases, behind the scenes stuff. So content that's maybe like behind the scenes, right? So like I think there's like YouTube subscription kind of a thing for this. Speaking of YouTube subscription, The other time, somebody donated to me a super chat. It's not a requirement. I answer any questions anyway, and right now there's not even any questions. Usually, when I do this in Zoom, it's a lot livelier because in Zoom people can talk, actually like talk, and I can hear them. Here, it's not so much. It's just me talking, and it's maybe not as fun for people watching. So I'm aware of that, and just like it's not as interactive. But nevertheless, um, if you want a super chat, if any of this is interesting or helpful, it's not like I need the money. I'm fine, and I don't charge anything, and it's not a requirement. But you know, the other time when somebody donated, they donated $5, and I was you know whatever. I appreciate any amount. You can donate less. It's less about the money, and it's more like it's kind of nice to get it. Like it's kind of like it's disproportionately, it feels disproportionately nicer than what it actually is. So no requirement, but it's like a kind of a fun thing and a nice thing actually, because you feel good about yourself when you do it. You're like, oh, people appreciate it. Oh, cool. Or maybe people just do it out of pity, like with this guy talking, showing stuff about smart contracts. Pity the fool. Um, that's a reference from the 90s. Okay, let's read the next idea for a smart contract. Collaborative project bounty contract. What is this? Fund collaborations between artists. Now, this is a little complex. Like, I don't want to manage any or oversee any collaborations. Like, I don't want to get in the middle of that stuff. Or I guess I wouldn't have to because it's the token. Let's see how this will work. The contract holds the Spark funds for a bounty tied to a creative brief, I guess a proposal. When all participants compete deliverables, they contract to blah, 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 blah. Seems like least good of all of these because it's just too complex. Now, the charity giving back contract, that's the example I used for giving back to like, pets and all this. If you have a pet related token. So, okay, fine. This is a good idea. And then interesting, it has a recommended combination for phase one. Okay. Oh, Moab marketing. And I thought I had a lot of tabs open. Yes, maybe you have a lot of tabs open, but I mean, if, yeah, stay on this tab. Oh, no. I see what you're saying. You're saying I have a lot of tabs open. Yes, I have a tab addiction problem. It's not so much tab addiction problem, but it's like a lot of them, I'm like, I think I'm gonna get back to some of those things, and then I don't know what they are. Like, these are Udemy tabs. I don't know what they are. Course I was editing a million years ago. Okay, I can close this one, but I just don't like babysit them. Okay, I wasn't don't need that one. Okay, I realized why I kept them open. Oh no, I closed those. So there was a reason why I kept them open, but I literally have been keeping them open for 3 weeks for 2 weeks. So maybe I'm just hoarding. I guess the name for this is tab hoarding, right? I'm a tab hoarder, not a tab whore, just tab hoarder. Which one is better? I don't know. Let me. Now I'm quitting everything. I'm quitting some programs. I'm like, okay, I got you. Yeah, I'm a tab hoarder. It happens. It happens. We're gonna work on this after my other vices. So this has to get in line. But mostly, I just kind of forget that I have them. They don't differentiate so much. Like have to mouse over. I'm not gonna mouse over. Even if you mouse over, it's like hard to tell what it really is. To think like, what was this thing? But yes, okay. Uh, we'll call this a new name. Will be tab hoarding. I'll note it in the comments in the chat so that um, I'll remember. Maybe I'll make it a thing. Everybody's like wants to become famous for like something great that they do. This will be my like because I can't become famous for anything great. This will be the dumb thing that I do. The like coin the term tab hoarding. I'm sure somebody's come up with it many times already, but let's say since I've never heard of this except I made it, we'll say tab hoarder. It's a solid way to make fun of me. All right, so this was ideas from ChatGPT. We asked the same thing from Claude. So actually, let's compare the results. It's a little more succinct, first of all. So sometimes it's good. Although I did like um, the extra points. I like the purpose. I like why it fits, and then the bullet points. So I kind of like the verbose nature of ChatGPT. I don't like it always. Sometimes it's just a lot of blah 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 you have to read. So it's hard. It's very, very case by case basis. So it's hard to tell if it's a better or worse. Maybe just stylistic change. Now let's see. Let's read it actually for what it says, and then let's see if the points that it made are better. Let's see. So here's a compelling smart contract idea that could differentiate the Spark token and drive adoption among creator communities. Royalty stream, creative royalty stream. Let's see what that is. Actually, no, actually, no. You know what? It kind of presented the results in a very different way. Like here, it's mostly talking about one idea, but let's see if it's a really good idea. This contract would create an automated perpetual loyalty system for where Spark holders can invest in creators' projects and receive ongoing revenue shares. So, a donor or an investor in the crypto in this token can donate to an artist and receive some part of the transaction fee. But they would receive if it's just a transaction fee, that's a small fee. So I don't know how attractive that would be. In any case, let's see if I'm on the right track, if I understand it correctly. Core features: project funding goals, creators mint project tokens backed by Spark. No, it's talking about something else. Like this is not a use case. And I don't even know if it's possible. Maybe it's possible, but it's confusing because you wouldn't back other tokens by Spark, or maybe just phrased so weirdly. Like Spark token is a Solana based token on the Solana blockchain, but whichever. Community members stake Spark to fund projects. I also don't get it that much. I guess they would just stake Spark, make more money, and from that more money fund this project. But I'm a little confused. Automatic revenue distribution when project generates income. Now that's a cool one, right? Let's say you donate to some artist or musician, and their piece of art actually sells, and there's a transaction. Some of that transaction goes back to the donor, which really makes it attractive for the donor because the donor can profit instead of being generous and saying goodbye to their money. So this is cool. This is really great. See, because if I'm a donor, I just lose all the money that I donate. But with this model, let's say that piece of art sells for something amazing, like a high price, I can get some of that money back. And if it's a really high price, I can make a profit and donate. So I can be philanthropic while profitable. Interesting, interesting. Now, the challenge also is to choose between these because now there's a lot of good ideas. To be fair, I asked ChatGPT GPT-5, so the same model as the one I asked before, this one, um, for ideas, and I was using voice chat, and maybe I didn't understand it in voice chat because it spoke too fast or something, but it didn't seem like the answers they were giving me were as good as these because all of these from ChatGPT and this one from Claude is super cool, and I think they're usable. So I think like this month of October, I'm gonna do this like October, November. I'm probably gonna create a bunch of such smart contracts so that then I can go and promote this token and make it like really different and attractive. That's pretty cool. Let's read the other point. Tiered supporter benefits. Different stake levels unlock different perks. So, oh yeah, the bigger donors get more. I just don't know if it's 100% doable, but it seems like it's 100% doable because it's recommending it. Like, I mean, technically it's doable. I guess, yeah, from if you own an NFT, I guess you can make NFT badges, and whoever holds the bigger NFT badge. Okay, I can kind of see it, but I have to research it technically, but it's a good, interesting idea. Differentiation hook success multiplier. Yeah, it is. When a funded project succeeds, percentage of the royalties automatically flows back to the Spark stakers. Ah, so maybe, yeah, okay. But it's kind of similar to point one, where the investors, but not the investors, the stakers, people who already have this token, not the investors who donate money to the artists, but the artists who choose to stake this token for an extra bank CD like reward, those people would get more money, which is actually cool. Now, it's just so hard to pick a good smart contract because at some point you run out of money you can give because you can't give money for this and for that and for this and for that. So you got to pick like the most attractive one. And then collaborative IP rights. Smart contract manages functional fractional IP ownership. Sounds complicated. Why this works? Creators access to capital without traditional gatekeepers. Yeah, for sure. Tangible utility beyond speculation. Yes, that's true. Yes, that's true. Investing in actual creative output. Yes. Viral potential. Early supporters are incentivized to promote projects they backed. Yes, it is, right? That's true because if they promote and the project is sold or makes more money, the donors get more of a revenue share. Okay, okay. Network effects, more successful projects, more value in the SPRK. Yes. Okay, okay. So that's what gonna do. Interesting. Okay, that's really cool. Um, interesting. It says, want me to sketch out the technical architecture or tokenomics for this? I guess. How would I do this technically? Okay, let's see what it says. Okay, let's see. A lot of reading for that, and it's boring. Great question. This one is also complementary. Smart contracts on Solana are called programs, and they more technical than token creation. Oh no, I hate that. Your options easiest to the most custom. No code, low code tools. Okay, that's sad. I was hoping it would be easier. Oh yeah, I also need to create token vesting. Payments, streaming for creators, okay. So these kinds of things you can do easier, it says. Then you get a template that you can customize, Anchor framework. Built from scratch. That's hard. Okay. Timeline 3 to 6 months. You crazy. Hmm. Okay. The hybrid approach. Launch phase one with existing tools. Stream flow. What is this stream flow? Simplified token management infrastructure. Like when they say book a call, that means like it's an expensive thing. So don't want to do that. Hmm. Okay, it's a little sad. It's more difficult than I thought it was going to be. I thought it was going to be kind of easy. All right, something for me to research. Little sad. How's everybody doing in the chat? By everybody, I just mean more marketing. Um, let me let me ask ChatGPT how to do it non-technically. If I want to create these smart contracts, it's thinking. Do 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 do. It's an old song, Jeopardy. I don't know if people still watch Jeopardy. By the way, Moab Marketing, remind me your name because it just says Moab Marketing, but it doesn't show me the name. Wrong, Alex. Is that a Jeopardy reference? Like Alex Trebek? Sammy. Hey. Cool. What are you working on, by the way? Um, I think you're coming from Udemy, right? What kind of stuff are you working on? Do you have anything you want to talk about specific to what you're studying on Udemy, or not so much? While you're answering, let's read the answer from ChatGPT. All right. Zero to low code blueprint for SPRK, automatic creator revenue share. Okay. So I can create revenue share. Route a small fee from each Spark transfer to a security creator, to a treasury creator pool. Okay. When you remint Spark with a transfer, I'm not planning to remint Spark. Weird. A fraction of every transfer is withheld automatically, no custom program needed. You later harvest it. Okay, sounds like complicated, but not so complicated, but not like so easy either. I feel like there's an easier way. Like if there's a programming language, why don't I make ChatGPT just write this thing in the programming language? Anyway, patronage, staking, and token distribution. Okay, few clicks. I can do few clicks. This is my level of work at the moment. Few clicks. I can do few clicks. Anything else? I don't know. Uh, Goal fence stake to support. Yeah, staking is good. Staking to support artists and rewards, and the creators get a cut. Okay, okay. Oh, so if the investors actually invest and hold this token and then do staking, whatever they earn from the staking, that can go to the artist. It's kind of cool because it encourages people to buy it. The main problem is the artist is going to get pennies because you just get a little bit goes to the artist, but does fulfill the idea that they're going to stake this and make more money. Just the wrong people are making the money, right? The investors rather than the artists. Um, Milestone based microfunding. Okay, I like this. Funds released when milestones are met. Okay, this is in line with what we're thinking. Community governments and treasury. Boring. Tiered membership access. Okay. So, and now they give me the suggested stack of what I have to do. Oh, I switched and there's a question. Let me read the question. Um, my question was so Sami. My question was about GBP and SEO. GBP, Great Britain's pound. I don't know what GBP. Do you mean GEO, like the AI version of SEO, or there's GEO, AEO, LLM SEO, but I don't know of GBP. There's also like Google small business, SMB, GMB. So all the GMB, Google business profile. I don't know that thing. Google business profile. I think you asked me, were you the one who asked me about this like before? Let's see what this thing is. Get listed on Google. So is that this thing? Ah, that's a good question. That's a good question. So this is my local business. So this is the Google My Business, right? This is like if you go to google.com/business, like I'm gonna go there now just to show people. Here, it's like if you have a local business, they say you can post your business on the Google map. And so this is the GMB, Google My Business, GMB. All these acronyms are getting confusing. So if you're a local business, like here you see I used to have a local business when I lived in this place, Manhattan. I was promoting my coaching like as a local business as well, that I could meet people and we can discuss stuff. But the problem was that I moved and I never moved this thing. And I didn't want to do this offline. I kind of wanted to keep my business only online. So it stayed there. But that's why I have my business profile filled out. But okay, that's the token. Where was we? Where were we? And that's my profile. Yeah, this is a local business profile. Look, it's funny. I coached over 1,000 people and taught over 100,000 people. This is such a long time ago because if you look now, this is my AI digital twin. That's not what I'm talking about. If you look now, I have 1,000,000 people, 1,000,000 students. See, 1,006,000 students. I just crossed this milestone. But this is written when I had over 100,000 students. So super long time ago. Anyway, this is my Google profile, but you can fill this out, or maybe this is this is the local business profile. And then the rest is me and the products I sell. So this I did in, where did I do this? In Google Shopping. Products I sell. So, and then there's some publicity that I did, some podcasts, Facebook profile, website. But which part of it is the profile? Because I guess it's a part of the Google local map. Maybe it's a kind of a new concept, but it's just really part of something that's always been around, the Google local or Google My Business. What kind of question do you have about it? You send me an email. Okay, let me go check. Let me sharing, and then I'll check my email. I didn't get an email. me check spam folder. No. Um, I'll drop my email address just in case. Oh, got a comment. So a client of mine has two locations. They're both verified, but the second one is not showing up to organic traffic. It is a copy of the first site. So I'm thinking the second site is getting canonicalized. Yeah. But the first site, what do you think? That's a good question, actually. That's a real good question. Offhand, it will be really hard to know why this is happening because it could be like a million reasons. If it's a different location, it's a very common use case, right? Like it's so many businesses have multiple locations. So I would guess Google wouldn't get tripped up just on that, like a very common thing. Um, so why would that happen? Um, Maybe it's newer location. Maybe there's not enough reviews. That would be the first thing. Like, is the second location, does it have like a lot of or some reviews, or are the reviews fake, or like are they by actual clients? What's the situation of that second location or the second listing? Maybe it's too basic of a question, but it's generally 7 months and 19 reviews. Okay, so it's been there for a long time. Would you be able to, here, I'll put my actual email here. Would you be able to send me the link to any of this so that I can go and look? I can share my screen and we can explore it. I don't promise that I'll find anything, but I can at least try. Because just in theory, looking at it is very hard. But if you send me the link to whatever you can, you just the YouTube chat doesn't like let you post links, but I can do it because I'm the host, so I'll be able to do everything. Let's see. Maybe I already got that. No, I didn't get an email. Um, why would second location not show up? It was on the same listing. You know, I wish I had all the answers, but what if we put this into ChatGPT in both of them? Let's see what it says. Maybe it does say duplicate content. Not sure which location to rank. Maybe even apply a soft penalty if it looks manipulative. I don't know. Differentiate each location. So you want to make each location seem different. So that will be referring on your website, I guess. Unique photos, right. So even in the Google business listing, they should be different. Have you tried differentiating it extensively? I think that's a good suggestion. I don't know if you have differentiated it already extensively, but if it's a carbon copy, maybe it's very worth trying to be different, to make them different. Let's look more. I don't know if you have to make separate Google business profiles. Let's ask them. Okay, so each physical location is a distinct thing. So yeah, maybe you have to really differentiate. Multi-location businesses should create individual Google business profile for each location. Okay. Yeah, so 1 GBP. The problem is myself, I only have one location. So um, I didn't work extensively like with multiple locations. So this is not an area of my strength, but this is super helpful because this gives great answers. Specific phone numbers, which probably you have, different for each location and different photos. Yep. So I think actually, based on what you mentioned, and let me read your email because I got your email now. Uh, Let me share my screen so we can all read it together. Do they have separate business profiles? Um, Share screen. Let's read that email in full. So hopefully it's okay to share screen. I'm just gonna just for purpose of reading it. Client with two different locations. The first one's in Huntsville, second one Chattanooga. Business profile for Huntsville location shows up on Google, but that one doesn't. The GBP for the Chattanooga location is non-existent and is getting no organic love. Right. So they said you have to make a GBP for the both of them individually. So that's first step. I'm thinking I need to change the address of the Huntsville location in order to create a new business profile. I think you just have to create more unique content for each of them. Chattanooga location and Chattanooga address. I do not manage the Huntsville location, so that client will have to change it. Yeah, whichever you manage, that's the one you would obviously change. And then that will lead to a verification issue. Yeah, I guess so. It's confusing because I'm like, which one is which? So the Huntsville one shows up. Chattanooga does not. And you don't mention the Huntsville. So the client then obviously, okay, got it. So then the client would have to go in and change up a whole bunch of things, which is reasonable. I mean, I think if, it depends on the client, obviously. Some of them are a little bit like not responsive, not proactive, but if they want to rank, which probably they do, I think the answer is clear. I can send you the answer here. And you can rephrase it and show it to your boss. Maybe you don't want. You don't want to maybe tell them that you use AI to get this idea, but generally speaking, you would tell them, hey, this is likely the biggest reason. Um, Cool. If you're using Wix, I also don't know because Wix has a weird architecture where like it's like one page, um, but under one page it's like a bunch of pages. They have a weird architecture which is really hard to do SEO with. Just not too SEO compatible. So how do we fix that? For Wix, honestly, I've never worked with the Wix website, and whenever I did a Wix like SEO, I was like, I don't even know because when you do a view source, it doesn't show the source. Um, Wix is a whole thing in itself, which I also don't have experience with Wix, so maybe asking, let's ask AI. Hmm. Yeah, like it's weird, right? Because you can create a separate page from the same page, from a single page. And for SEO crawlability, it's a little tricky. But if it says it has no raw HTML, yeah. Raw HTML is really hard to get. I think you have to get it from inside the dashboard. So let's ask AI again. Interesting. Okay, I think you might have the answer here also. So maybe try this, right? You put it in Google. I guess do the two locations have different website or the same website? See if it's indexed at least. So if it's different websites, right. So the one that's not showing up in Google, can you do that with the site colon that one and see if it gives you anything? It shows that it's indexed. Okay, so then it's indexed. Hmm. Let's see, Wix SEO settings. Go to settings, SEO, Google, in Wix dashboard. Make sure let search engines index your site is turned on. Okay. Check individual. So that would solve the no index, right? Let search engines index your site. That might solve that. Check individual pages. Make sure it's not saying don't display, but it looks like it is indexed. Submit to Google manually. Have you tried to submit the pages? I guess you submitted because um, it looks like it's indexed. So Let's see. How do you say it's actually indexed? All right, so we'll tell it it's indexed. So let's see what else I can suggest. Rankings too low. The cannibalization issues, but if it's different locations and different content, so maybe that's the solution of creating different content, weaker local signals, reviews, and maybe like I don't know if the reviews are from real people or from actual clients or from like friends, quote unquote. If it's from friends and it's too detectable that it's just like friends, kind of fake reviews, then um that could be the reason. It has to get more like organic. And also sometimes if you ask people, like Google is kind of smart enough to detect fake reviews or like manipulated or asked for reviews. So maybe because of that, even though you have like 19 reviews or 17 you mentioned or some number like that, real reviews according to Google just may not be enough. So maybe try to get more from clients, although it seems like there's already enough. That my business is not optimized. So yes, a separate has to be separate. I guess you mentioned that it's not two GBPs, it's one. Technical issues with the page itself, maybe, but how to diagnose? Yeah, in the Google Search Console, it will tell you some technical issues if it's something is technically wrong. So definitely look at. I think you mentioned there's only one Google profile. Um, if it's just one Google profile, you definitely need to make two, and then go to your Google Search Console and see if it's technically. Sorry, I'm just putting on. It's a little cold here, so I'm just putting on a sweater. By the way, I have a Udemy sweater. Here. Where's the thing? Udemy. Special sweater because it's for Udemy instructor partner. Not everybody gets this. I like the sweater. It's also comfy. Also, because I crossed 1 million students this month, a couple of actually just a few days ago, um, they're supposed to send me a sweatshirt like this, a little different, but with it says 1 million students. Maybe the differentiation between the two. So at least we found some clue, which is like one of the first things that started talking about that differentiation is not enough. So maybe we try to work on that, and then the next 12 hours, if that doesn't resolve things, we can continue to look into it. But at least maybe we got on some path. Hopefully, like at least something to look into, instead of being like confused at a dead end. So hopefully that kind of helped. Here it's getting a little late, so I kind of want to end office hours, not going the whole 2 hours, just because I get tired when it's 2 hours, and then every once in a while I like started doze off. Um, but we did like a good hour and a half almost. So if that was helpful, Justin, hey, I'm worried about all my crypto portfolio in Binance. Is this going to be a spam comment? Sure, Sammy. Yeah, I'm happy to help. Hopefully that helps. I don't think it's going to like, usually Google takes a little while longer to propagate all the changes, right? So it's like ideally it would be ASAP, but sometimes it takes them longer. So I don't know if it's on the next office hours, we'll see a big change, but maybe hopefully at least we'll see at least some movement if you like make those changes today or tomorrow ASAP. Maybe it will help If you differentiate a lot, maybe at least some movement there will be. And if there's some movement in the rankings and some visibility, then at least we'll know, oh, we're on the right track. Um, so maybe at least that's something. But yeah, maybe I'll jump off for now and get and rest, and I'll try to do one next week. I'm not sure if I will do next one next week. I might also like something happens to Udemy announcements where they don't get received by most students. So in the past, I used to get like a lot of people coming in. Now there's like a lot fewer, and it's been like that for not just me, for like a lot of actually all the instructors that I talk to. So there's a technical issue on Udemy where these announcements go to almost no students that I send out. So like it kind of defeats the purpose because the turnout is like a lot smaller than it used to be. So I gotta think about it. So I'm not sure if I'll be back on next week, but maybe when I figure this out. But for now, thanks for joining and thanks for taking my Udemy courses in the first place. And I'll see you next time.